Welcome to this episode of AntKast by Ant Group. It's a podcast that brings you deep into conversations with global thinkers, innovators, and entrepreneurs on groundbreaking technology and how they're shaping our lives for better or for worse. Today, we're honored to have the finance and technology expert and best-selling author Chris Skinner with us to share his insights on financial technology, or fintech, and how it can be used for good, both socially and environmentally. We will be covering topics on what it means to be digital, the differences between fintech and traditional banks, and how the digital technologies are enabling initiatives for public good. Chris, it's a great pleasure to have you with us today. Welcome to the show.
It's a great honor to be on the show, so thank you for inviting me.
Right. I know that you've started research in fintech before this word fintech even became popular. And it would be great if you could tell us a little bit more about yourself and your story with fintech.
Well, I've always been involved with finance and technology, and I started my career as a technologist, as a programmer, in fact, many moons ago. And then I dedicated my career to actually working with banks and insurance companies because that's where I felt there was a real excitement. And it's quite funny in that when you think about how money and technology drive the world, then I was actually in the space where the clash of the future occurred. And I've always been focused on the future as well, because that's the only thing that we don't know. It's the only thing that we can change. You can't change today or yesterday. You can change tomorrow. So I've been involved in that for all of my working life. And 20 years ago, I started working on my own independently. And I began writing, I began talking and speaking and researching and spending all my time thinking about the way in which technology and finance changes the future. And luckily for me, people are interested in what I have to say. So 20 years later, 17 books later, I'm still doing the same thing. But most of my predictions came true. Some didn't. The ones that didn't, I don't talk about. The ones that did, I tell everyone about.
Right. Let's talk about your book, since we're talking about books. The latest one, the title is Digital for Good, Stand for Something or You Will Fall. That's quite interesting. And do you want to elaborate a little bit more on this title? For example, what do you mean by stand for something, and why do you think doing good in a digital way is so important for companies planning for the long run?
Well, the book is actually looking at a range of subjects, and the main topics are around ESG, environmental social governance, and how that affects financial firms, fintechs and banks. Partly inspired, to be honest, by Ant, because when I visited Ant's offices in Hangzhou, there was a poster that said, do good for society and good for the planet. And to me, that resonated very strongly, because I think that's a purpose. That's what your company, the Ant Group, stands for, which is trying to make the world a better place. And that is what I've been talking about significantly with a lot of companies, because the book actually goes back many decades, but particularly the financial crisis in Europe and America of 2008, where there were many questions about what do banks stand for? Are they socially useful or socially useless? And there was great debate around the moral compass of the financial industry and where it sat 15 years ago and where it sits today, because we've seen many of the organizations abusing customers in terms of not providing services appropriate to them. And I could illustrate this immensely. But the book ended up around these themes of what is the purpose of finance? What does it stand for? And if it doesn't stand for something, it will fall or fail. And particularly when you look at next generations, the younger generations, they want to be associated and to be supported by institutions that they believe are doing good for society and good for the planet and making the world a better place. So these themes all came together in this book, and I ended up, I didn't believe it was appropriate to write a book with Chris Skinner pontificating about, you all need to be better people. So I got contributions from all over the world, including your good selves, but also some friends across South America, particularly in Brazil, some friends across Europe like Rabobank, and many friends in the Americas and in the African nations. And so the book ended up being huge because there's 22 contributors who've been interviewed or talked about what do we stand for. And I think I'll finish it with a couple of final examples. So I interviewed Adrian Gore, who's the founder of Discovery Group, a financial group based out of South Africa. And their purpose is to build health through wealth. And when you look at how they do that, they provide a lot of services to encourage you to work out, to go to the gym, to be healthier. And the healthier you are, the wealthier you are. I talked to Tom Blomfield, the co-founder of Monzo, which is one of the big UK challenger banks, and their purpose is to open financial services to include everybody. And inclusion is a big topic, but what does that mean? How do you include people who are homeless? They have no address. Well, you can, and the book tells you how. So there's lots of perspectives, but it's all about making the world a better place. Well, just to underscore what you've been doing, I mean, it's 2017 when I came to Hangzhou and interviewed a lot of people for my last book. Well, actually, 2 books ago, Digital Human. But I was really inspired by Ant Forest and the whole idea of the sustainability strategies of the group. And right now, I can see people copying what you did, which is fantastic. But it's interesting that your company started a wave of how to bring finance and technology together to make the world a better place.
Yes, you're very right. For us, the key is always to play our role as a connector, as a platform that brings together our NGO partners, for example, with users, so that their choices their low carbon choices in everyday life could easily be translated into environmental friendly actions, for example, tree plantings by our NGO partners. Now, talking about ESG, we've seen people in the industry arguing about how banks and technology companies can do more on ESG. That is short for environment, social, and governance. And the concept of ESG sometimes can also be controversial. Critics say that it is more of a replacement for risk factors, so investors can base their decision-making on companies' ESG performance. Others believe that a company with good ESG performance is more likely to succeed in the long run than those without, and are more likely to create more value for the communities they are trying to serve. So it is more than just risk mitigation. What is your take on this?
Well, it has been demonstrated statistically that companies that have a good societal focus, community focus, and focus on ESG perform better than those that don't. And the reason is that they have a support not just from the community and society, but they actually are delivering back. It's like the pay it forward strategies. But when we look at where we are today, I think a lot of people are fed up with the idea of environmentalism because it's talked about far too much and there's not enough action. If we look at financial institutions, a lot of them talk about it, but they don't actually do it. They talk the talk, but they don't walk the walk. And there's a phrase, greenwashing, which is used about these institutions, which is when you look at their marketing and PR, they're saying we are sustainable and environmental, and we're doing all these projects that make us look like we're doing good for society, when practically they're not. They're actually doing bad for society because their investments are geared to fossil fuel firms and fracking and things that are destroying the planet. And there's loads of statistics here, but I always come back to some basic statistics, which is between 1988 and 2016, 71% of greenhouse gas emissions were emitted by just 100 companies, which are mainly fossil fuel companies. In fact, half of that was coming from just 25 companies. And you would think, therefore, that the financial institutions would stop those companies performing that way, except that they make a lot of money out of financing their operations. 14% of the profits of European banks come from the companies that are destroying the planet. And between 2016 and 2021, which is when the Paris Accord was signed in 2015, $4.6 trillion was invested by 60 banks in these fossil fuel firms. And so finance actually sits at the heart of the issues we have between the destruction of the planet and the creation of the planet, the support of the planet. But at the moment, a lot of fossil fuel firms claim that they're doing the right thing, but practically they're doing the wrong thing. And that has to change. And that's what this is about in terms of what I'm trying to convey, but equally what I think companies like yours and others are trying to convey, which is we have to behave better and make the world a better place and stop destroying it.
Right. I think that we've covered the concept of greenwashing and basically examples of companies that didn't really stand for something, so eventually they will fall. But I believe you've included many examples of digital for good from different countries in your book. Do you want to talk about one or two of these examples? Because I believe our audiences, many of whom are also from the digital technology sector, will be very interested to know some of the actions that's actually taking place.
Well, we mentioned Ant Forest already, but there's an interesting example in the Nordic region, which is Ireland's Banken, who have the Baltic credit card, which basically every time you spend, it's trying to invest as an offset into saving sea life in the waters of the Baltic Sea. And that was very successful for a very small Finnish bank. But they then had the idea of, if it works for us, maybe it'll work for other people. So they developed the idea into a white label service that's been sold around the world and is now used by over 100 million credit card users worldwide. And it's all about every time you spend, you should think about the impact that has on life in the sea, life on the planet. There are many tree planting examples like your own, but I think when I look outside that, what is encouraging today is the fact that there are so many companies, particularly the startup fintech community companies, technology and finance companies, who see finance as a way to include everybody in their operations. And inclusion is a big focus of the dialogue here, which is, and I said this actually at the United Nations a few years ago, and people laughed at me, but people laughed at me 30 years ago when I was saying that you will be able to make payments from the top of Mount Everest. And today people have made payments from the top of Mount Everest. 3 years ago I was saying anybody who has access to a mobile telephone is included in the financial network, and pretty much everybody on planet Earth can get access to a mobile telephone and therefore can be included in the financial network. And that inclusion, particularly if you balance that with carbon offset and the other things we're discussing, whether that's conscious or unconscious, really changes the game. And for me, the most important thing today is the fact that women and young people and people who have been excluded are now included. And that is a game changer.
Right, indeed. If we look at how fast the financial industry evolved since 2008, with trends like fintech or open banking, omni-channel, omni-access, which created huge markets and value in just 14 years, What do you think are the fundamental driving forces behind these paradigm shifts?
Well, the predominant thing is that in the late 2000s, but 2008 was probably the big year. Um, Two major things happened. One is that we had a massive crisis in the confidence in the financial industry in Europe and America. I find it amusing because everyone in America and Europe calls it a global financial crisis. It wasn't. It was a crisis in Europe and America, which had effects on other parts of the world. But there wasn't an Asia crisis in 2008. You had yours in the late 1990s. So that's the reason why I keep saying it was a European and American crisis. So that was one big thing, which meant that major institutions like Royal Bank of Scotland and Washington Mutual, Bear Stearns, Lehman Brothers disappeared. At the same time, the emergence and maturing of technologies, specifically around cloud computing and smartphone, were happening. And the iPhone was released around the same time as the financial crisis. And when that appeared, people said, why would you want to have a phone without a keyboard? Because BlackBerry was dominant then, as were Nokia. Where are they now? And the smartphone changed the game again, going back to game changers. So what happened is that a lot of companies started to focus on what can we do with a smartphone, with cloud, and with application program interfaces, APIs. And I often use this chart, which I developed many years ago when I launched Digital Bank, which came out in 2014, which is the front, middle, back office of a bank these days is not a branch with buildings and humans and infrastructure and a head office, but it's actually apps, APIs, and analytics and data. So the front office is the apps, the middle office is the APIs that are based around cloud, and the back office is the data. And that's become a model that I've been trying to not sell, because I don't sell anything except my ideas, but I've been projecting to the financial industry. And one of the things most financial institutions don't understand is that they try and add cloud computing and smartphone and internet as what they call channels to what they've always done, whereas actually they should have been born that way. That's the way their business should be structured. And that's when you look at fintech companies or Ant Group or Alibaba or any institution that's been born digital, they've been born that way. They haven't tried to add these to their old, frail, weakened, dying infrastructures. They've been born that way, and that's the critical factor.
Right. Talking about change, for a long time, people in and out of the industry have been debating on whether fintechs will be the end or the beginning of banks. Or put it another way, are their relationship complementary or adversarial? Do we have a consensus already, or what's your take?
I think it's called complementary, and it's going to be co-opetition, as in they will compete and they will collaborate. Many fintech companies, of which there are today, I'd estimate 30,000 out there, have started with the idea of fixing what banks don't do well. And therefore, if they have fixed it, why would a bank not want to collaborate with them and to have that augmentation of their service so that banks can work better? And my advice to most fintech startups is either fix the things that banks don't do well, or do something that banks don't do. But don't try and be a competitor to a bank. There are many competitors to banks out there. We call them challenger banks or neobanks. Their challenge is clear, that they're trying to take down a model that's been around for centuries, or to change a model that's worked for centuries. That's very difficult. Now, there are some that are doing a pretty good job at doing that, but when I look at the numbers, and last time I looked, there was about 400 challenger neobanks in the world. There's probably only 20 that are actually succeeding, and the rest are still very early days. They might succeed and they might not. But I'm much more enthusiastic when I talk about this area, saying, if you look at a Stripe or an Adyen or an Ant Group or any organization that's doing something, they're not trying to take down the old banks. What they're trying to do is to fix the things the old banks don't do well, or do something that the old banks don't do at all. My favorite example is Nubank, which is a bank that emerged out of Brazil. And I spent a lot of time in Brazil. I spent a lot of time traveling the world. But when Nubank launched, they had this mission, which is that if banks are Darth Vader, credit cards are the Death Star. And that was a quote from one of their founders. And what they ended up doing is they targeted the credit card system in Brazil, which was incredibly restricted, but they couldn't get a banking license. So they targeted the credit card industry. Because they did that so well in terms of reducing interest rates on credit cards, they then got a banking license. They then went to Mexico, Colombia, Argentina, and they become one of the biggest banks in Brazil, now valued in the billions of dollars with 50 million customers. And that to me is the essence of the change we're seeing. They're not targeting the old banking system, they're targeting what the old banking system does badly.
Right. The COVID-19 global pandemic has had a significant impact on people's lives and the business everywhere we go. What do you think, are the new technologies or the new set of technologies that are going to be essential to power the growth of digital economies, especially in the post-COVID world, and why?
I think you, like me, like everyone else, probably discovered that when the COVID crisis lockdown hit, we had to become digital. We were forced to be digital. And that wasn't there before. By way of example, with my own personal experience, I spent a long time thinking I don't need to use the wallet on my phone for contactless payments because I have the card to make contactless payments. And yet suddenly I became quite easily moved because of the pandemic to use my phone as my wallet. And I didn't have that motivation until the lockdown occurred. Equally, during lockdown, everything that I've been doing has been through digital remote services because it had to be. Once you got used to that, you don't go back. Now, the main technologies there are the ones I've already mentioned, which is the smartphone and cloud. What was interesting for me is that, by way of example, a lot of banks, traditional banks in Europe and America, signed cloud contracts very quickly after lockdown occurred. But what they did is they lifted their old business into the cloud. So they became cloud-based, but they didn't become cloud native. And it's a difference between being born physical and being born digital. And the companies that are born digital understand all the things we're discussing around key technologies like artificial intelligence, machine learning. You can't be intelligent with data if your data is dumb. And a lot of the born physical companies, their data is dumb. It's stuck in old silos of business based around product instead of around customer. It's fragmented and it's never been consolidated and rationalized. And this is a huge issue for the traditional financial firms. For those who are born digital, from day one, they wanted to have a complete 360-degree view of the customer, and they have it.
Right. On a separate topic in your book, there's one chapter that talks about the future of green fintech is Asia, not Europe, not North America. But I just wonder, why is that the case?
Well, mainly because America and Europe implemented most of their financial technology in the 1960s, 70s, and 80s, and then they added to it. And so they've got this embedded infrastructure which is now incredibly immovable because it was developed on very old technologies that are very hard to change as the core of their infrastructure. And I always remember going to Beijing at the end of the 1990s and seeing an incredibly manual process, a paper-based process. Back then, to get to be a worker in a Chinese bank, you had to prove how good you were with an abacus. And obviously that has changed a lot, but it kind of showed that China and Asia and African nations, South American nations leapfrogged the European and American nations when they applied technology, because they were applying the technologies designed for the internet age, and they didn't have these old handcuffs of mainframes and traditional computing systems and infrastructures that Europe and America had implemented. And there's still this challenge here, and it's exactly what I'm outlining, which is being born digital versus being born physical, which is the institutions in Europe and America were born physical and then applied technology to cement their physicality, whereas Asian, African, and South American nations were also born physical, but they didn't implement technology until technology was ripe. And then when they did, they were born digital. And this is a major economic shift, which says that companies that were born digital would be far more fit for the next decades than those that were born physical and locked themselves in with digital, which is what Europe and America did. So I think the next few decades will be very interesting. There's a great book about the AI wars, the artificial intelligence wars, and it's basically saying that China and Asia is seen what happened with Google and AlphaGo, and suddenly woke up to the AI challenge and is jumping. In fact, more than jumping, it's kind of like huge, giant steps forward in technology in Asia. And so when we look for innovation, I don't look to America, and I don't look to Europe and America. I look to Asia and Africa.
Right, we've covered a lot about the fintech industry, the latest digital trends, and so on. These are very serious topics, and let's talk about something slightly more lighthearted. Suppose you are the CEO of a fintech company serving the needs of the growing digital economy, and you are sitting down to write the mission statement for the company. What would the mission statement look like, and why would you write it that way?
It's kind of a tough one. And it may sound sort of a little bit off kilter, but I would say my slogan or mission for my company would be making your world a better place. Because when we talk about making the world a better place, it's something that sounds like it could be any old company anywhere in the world. Making your world a better place is very specific, and what I mean by this is it's got to be demonstrable to the customer that you're doing something that is changing the world for them and making their world a better place. And it's not just about how they live their life and spend their money, but it's about how they can choose their views around the world and what they want to do from their perspective to make the world a better place. So if you take my example, I don't care about the environment, and that may sound horrible for a guy who's promoting ESG related activities. What I care about is how human activities affect the environment for biodiversity and for the animal kingdom, because I'm massively passionate about the animal kingdom and biodiversity. So I want to make the world a better place through my choices around biodiversity activities.
Right. I think I can't agree with you more on this subject matter because from my personal experience, the most inspiring and motivating mission statements from companies are always the ones that talks about its value creation for others and not about the company, what the company wants to be or would like to become in the future. Chris, I know that you had to stay home because of the COVID lockdown for quite some time, and I'm just curious, what did you do? What did you do during that time? When you were having to stay at home.
Well, I think like all of us, I was stuck at home. In my case, I'm living in a country where I don't even speak the language. I'm living in Poland, and so I had no need to go out. And I just got fed up with things like we all did, particularly because I got two restless little twin boys. At the time, they were 4 years old. They're now 6 years old. So I read to them every night, and then I got fed up reading the same stories. So I invented a story around a cake that comes to life and travels through the universe with some chocolate and jelly and a potato, which is like a weird thing. But that became the stories around Captain Cake and the Candy Crew, where the cake is Captain Cake, Lieutenant Chocolate, Sergeant Jelly, and Private Potato. Go where no sweet has been before. And that may ring a bell for Trekkie fans, because it is a little bit Trekkie. But I floated the idea past my publishers, and it became a series of books called Captain Cake and the Candy Crew. And the newest one is where they save the Veggie Crew. I won't give it away, but that's fun.
Well, I'm glad you managed to find something to do, and that also brings a lot of value to kids. And on that note, I know you're very much into science fiction, which provides us with infinite imaginations about what the future could look like. In Ant Group's first ever ESG strategy unveiled in June 2020, we set a number of objectives to achieve by 2030. For example, serving 100 million small and micro-sized enterprises by that year. And these objectives give us a good sense of where we want to be in 10 years in terms of sustainable growth. So the question for you is, in your eyes, what would the future of fintech look like by 2030? So
in the newest book, Digital for Good, I actually have a chapter, The World in 2030, looking back at where we came from, which I'm not going to tell you here because you need to buy the book. But as I look forward, I always look forward with positivity. It's very easy to be negative. So let's take robotics, artificial intelligence as an example, which is when you look at a lot of science fiction, there's the dystopian or the utopian future. The dystopian is things like Ex Machina or Terminator, particularly is a good example. It's great entertainment. I just don't believe that's where we're going, because at the end of the day, we always have an off button. And so humans will always have this ability to innovate and create progress and change with an off button. And you have to remember that. I love the idea of quantum computing because the vision of quantum computing is that it will completely re-architect our world so that we can process 100 times more for 100 times less cost. So of course we're going to do that. However, what that means in practicality is that there has to be a way in which we think about what that means for commerce, trade, finance, government, infrastructure, society, and that's where I always focus. And my belief is that whatever decisions we make, we'll always make them practically because we have the off button. As long as we've got the off button, we'll be okay.
The future still belongs to humans. Well said, Chris. And with that, we've come to the end of our show. Thank you very much, Chris, for being with us today.
Thank you for having me.
That was finance and technology expert and best-selling author Chris Skinner. That's it for this episode of AntKast. To make sure not to miss a single episode, Please subscribe on iTunes or Spotify. I'm Shenle coming to you from Beijing. Thank you for listening. Bye for now.